Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today we'll go through a market update. Just a quick talk about the earnings. It's pretty much winding down. Then Joe has his session after. We'll go through his. I think he's going through his charts again. So that's the plan. Just a reminder. Next week we'll be going through the studies, the daily trades, an update for that next week, and then the week after that will be the earnings plan rollout on the 14th. So that's the agenda for the next couple of weeks. So let's get started today. As you can see here, sorry, people still joining. We did have some transitions, from 5. These were all in 5 before. So the NASDAQ and QQQ, you can see XLK, all the technology went into state 6. We're still at 5 on Russell and SPX. I'm not expecting that to last much longer. Overall, just pie wise, 71%, huge drop, 20% drop, almost even here, right around 50-50, and a lot of things going back into 8. So big movements there. Obviously, the market, had a big sell-off last week. So let's talk as far as market pulse. You can see we had that cross here for state 8, state 1s. Looks like his last meeting. We were right here, so obviously took off quite a bit. As far as like the lows, we did get it straightened out, so now we have at least different colors on them, so we can differentiate the highs and the lows. So we had a little bit of a build up here in new lows. As we get more and more symbols in state 8, that would lead to bigger drops in the lows here. So if we continue building the amount of symbols in state 8, then I'd expect these spikes to resume how they've been doing it for quite a while, since basically November is when things started really flipping. So something to watch out there for. Let's look at the bullish bearish. Obviously, we had a big move there, a big drop. I'm not sure why this one now is, oh Lord. Anyway, you can see the bullish, we were up around 80. Is that, that's a couple weeks ago. This had a crater down. So we're almost break even here. Potential cross in the next few days. Something to look out for here. We'll see how the market reacts. But that's pretty much the market pulse. We'll look at the individual symbols. So, for SPX, state 5 was pretty much the top, the current top. The next day it tried to run up a little bit, but pretty much closed flat and then turned over. So, and we had talked about, the chart impact of, that the resistance. I'll pull it up in the chart again, but I pretty much called the top there, that one, a couple weeks ago when we pulled out that big level. So, obviously well below any of the targets here, kind of off the chart. Obviously I would expect this to transition within a few days. The way this is usually down here, it already transitioned, but the algorithm does its own thing. So once those indicators flip over, then it'll go into probably 6 or 8. The other ones are kind of the NASDAQ and stuff went into 6. I would expect it to follow suit, although obviously it hasn't happened much. It's been there 15 days since the beginning of 07. So it hadn't been in 6 much, but we'll see. it's looking like it'll transition to a bearish either 6 or 8 right now. On the chart, obviously, we pulled up down below our kind of key level of 4,200 here. So, we had, basically a false breakout here, middle of August, came right back through, kind of, right over here, tried to break above it, and then, drastically failed on that day. That was when the Fed talked at Jackson Hole, I believe. So that was a big down day, obviously, for the markets. But so, that range right now, we're back in the 42 to 3,800 range. I'll just annotate the other part of that. There's the 38. So we're back in this range right now, had the false breakout. The other thing, obviously, I think we emphasize this. Let me pull this chart out a little. We emphasize this the big time on the previous call, but I think it's still, something that we want to keep an eye on. That pretty much called the exact top near term. So something to keep an eye on. That 200-day moving average is pretty much the same level as that resistance trend line above there. Hold on. So that's obviously the most important thing. We talked about that. So just glad I found that. I think that was the key to figuring out that day. So 200, obviously a big thing. We drop below the 50 here. How far we go, obviously that 3,800, it's really big level. You can see all the support down here, we broke, and so that 3,800 is obviously the bottom level there. We're not getting much from state modeling chart right now. Hopefully when it transitions, and probably the next day or two, we can get some new state modeling targets for SPX. So it's SPX. Same thing with Russell. This one actually went up into what we typically look for on the average move. Run up here, find support, and then run back up. But obviously this one broke down. Did get good support down here, and then Fed day that blew through everything, and now we're well below. Just like SPX, I'd expect this to be transitioning to a bearish state. This one is 40%. It's been more time, 54 days than SPX, so I'd expect it to go into 6, possibly 8, but looks like odds are it'll go into state 6 here. As far as the chart here, we had pretty good move above our that 1900 level, but now we're back below there. Hasn't really retested, blew through it. So right now this is the range 17 to 1900. But once again, same thing. That 200-day obviously is a big thing, both to follow for both SPX and Russell, and these other ones that are trending the same way. So we're back in that range. As soon as it transitions, we'll get new targets, but can't glean much from this right now. So we have to go to the charts. One thing I did want to pull up about IWM. I pulled up like the long-term chart. I check these, on a regular basis, but down here, we're getting pretty close to crossing over, the 0 line. When it crosses the 0 line, it can get real ugly. So, that may be another month or so, depending on, how things go. But, obviously we highlighted last week, September is historically the worst monthly return for stocks out of, all the 12 months. So, elections coming up in November. So, lots of things going on, but if this crossed below, I mean, you can always just, go look at previous charts. Like this one held here, but like anytime it really crossed below, you can see like here, it just like really tanks. So, it doesn't happen often. So that's something to keep an eye on. Obviously, I'll keep an eye on it too, but the other indices like SPY, they're not really close, but IWM has kind of led the way down here. So something to keep an eye on just with the, like SPY is pretty far off. Qs are similar, a little closer than SPY, but IWM is getting real close to that. That could be real ugly overall. Let's see what else. Hold up a couple. XLC is another one, that's kind of been leading the way down. This one topped before almost everything. This is like September, about a year ago, was the top for this. It's been doing a death spiral of 8, 7, 8, 7. It just went back into 8 a couple days ago. I wanted to kind of point out, because we've been using this one to kind of track. This is pretty much pre-pandemic highs. So, I think if we break below these kind of levels, it could get pretty ugly for XLC, and this is obviously the bottom level here, $40. That's a pandemic low. But this kind of level I think is pretty important to watch, at least for XLC near term. So, and we're right in that level. So it's already started off like a good move, but about halfway to its average move. So there's something that, I haven't seen too many retesting this kind of level pre-pandemic, but this one has, and it's led the market down. This and IWM have kind of been leading the march lower. I think I pulled up this XLK, just because went into state 6, pretty unusual state overall. Doesn't happen much, 29 days. This one actually did do state 6, so just wanted to pull it up, because we don't see these very often. So, only 2 occurrences since 07. So some have more than that, but just kind of wanted to pull that up. Some other news, obviously Fed-wise, we got a lot more shift towards that 75-point hike. We're about 3 weeks out from this. So it's obviously shifted back. About a month ago, it was on 50. Now it's pretty much 75 and trending that way. So after the Fed talk, obviously, that can move, I think, with, inflation data that comes out, the expectations. I think employment a little, not as much. I think the inflation numbers are really driving everything. So, but employment, I think, to a lesser degree. On the inflation front, I wanted to pull up some crazy numbers for you. So this is the calendar, Joe found, and I love this thing. So this is Germany, like import prices year over year, like 29%. Wait till you see this one. France PPI year over year, 27%. Like inflation rate year over year for, this is, I guess, a euro area. I haven't followed this one as much, but 9%. And then, to top it off, Italy year over year PPI 37%. So these people are in a world of hurt, like worse than what we're seeing, I think, or maybe their PPI is actually not manipulated at all, but who knows? But those are astounding numbers, and I noticed Italy last month, was right around the same kind of number, 33. Crazy numbers. Along with that, like, I saw some stories just like UK energy prices, like their electricity bills are capped for individual people. Those have the cap went up like 80%, but they're capped. But like, as far as like store owners and businesses, it's uncapped. So there's this like a ton of stories like this, like a cafe, 10K a year to like 55 this year. So 1 year change, which makes a lot of sense. When we're seeing these kind of inflation numbers over there, but that's even more. And they think the whole Ukraine situation, Russia cutting them off, it could be really bad over there in Italy. If this is just the start of it, it's not even winter yet. It's still warm over there. My parents are actually going over there for like a vacation. So, it's still warm over there. This could get real ugly. I mean, there's like tons of stories like this, but just kind of wanted to bring up. I thought it was interesting. So I think that was it. I'll open it up to questions, comments.
Hey, Josh, this is Dave. I got a couple here that to follow up on what you've been saying over the last couple of weeks. I noticed an article this morning. I'm looking away here. I shouldn't do that. That the Fed has actually bought back a grand total of about $7 billion of their mortgage-backed securities and bonds that they were buying out of 9 trillion.
Yeah.
So that's a grand total of like 0.0078, less than 1%.
Yeah.
Of their. Yeah, and so the article was actually saying that, well, this is causing some illiquidity in the bond market, and the bond guys are having to like break up, these are the big traders having to break up trades into like $25 million worth of trades that used to easily go with $100 million,
right.
chunks. So I guess the Fed move is like hawkish, is not great for the bond market either, and I just want to say that.
Yeah, I agree with that. I mean, from what they were saying, September's like really the kickoff. They kind of admitted they haven't really done anything yet, but September's when it really picks up. So that could be, I was talking about this in June. Like things are going to get real interesting, when they start, decreasing the balance sheet, but they really haven't done anything. I mean, you can see here number wise, it's like 60 billion out of 9 trillion.
Yeah.
So like barely touched it, but apparently, September, they're supposedly, picking this up. So that could be, I think that's a, bad sign overall for equities and everything really.
Yeah, that was my second point was the September, as you were just alluding to, is a triple witching month with quarterly, monthly, and weekly options. I think that, I don't know, it's the 17th or something like that. So watch out for that date for a volatility move.
Mhm.
And the Fed meeting, it's late in September. It's the week after that.
Right.
So if there's a run up in some of the major indices before that, I mean, we could see easily a repeat of what happened last Friday for that very reason. And so it's going to be a tough month at the end of the month. Just saying.
Yeah. If they actually followed through with their hike and the balance sheet reduction, I think it could get pretty ugly. They're pulling liquidity out. That's never a good thing. So,
hey, Josh, Lee.
Yep. Hey, Lee.
Hey, we keep saying it could get pretty ugly, and I certainly agree. I certainly agree with that. Do you have any kind of guesstimate of how ugly that could be? Because I read articles and it's anywhere. Well, lose 1,000 points, 1,500. If who is the guy that did the? Never mind the movie. Anyway, do you have any ballpark estimate? And maybe Joe does, since it might relate to Fibonacci, on how low could it go? So
Hey,
you're,
Yeah.
I mean, I think the key, to the downside first stop would be the June 16th lows. I mean, I think the mark, and that was just over 3,600 in the SPX, 11,000 in NASDAQ. The Russell maybe just above 1,600, 1,640. I think that's first. And from a Fibonacci retracement, all of those levels were somewhere between 50% and 0.618 going back to the March 20 COVID lows. So, and we're still a long ways from there. But I think that's the line in the sand in the short term. Josh?
Yeah, I think Ashok had gave us a number a while back. I forget what he said. Do you remember what he said?
He did. He
Yeah.
talked about 3,600 in the SPX. And, basically that's where we went in mid-June.
Yeah,
So I don't think he said 3,300. I think he said 3,600.
I was thinking 33.
Okay, he
That's
may
the-
have, that might be, you might be right.
Yeah, the reason I say that is, I mean, we saw what like XLC, which is leading the way down, came all the way down to, basically, pre-pandemic highs, and that's
Still there, Josh?
This is
Pretty
Dave.
good.
While there's some
Pretty-
silence
Let me
here, I
ju-
wanted to reply to something that Lee was heading at. Were you looking for the Big Short movie there, Lee?
Yes,
Kind of
thank you.
like
Michael Burry. Yes,
Yeah.
thank you.
Yeah, but here's the thing. It's you're kind of like we're asking about like an absolute kind of like number or even estimate at that for for what people were thinking, and that's a good question to ask, I think. But I think the rate of change might be the more important thing to look at. If we head towards those lows like Joe and Josh were just talking about, the most recent lows, and I think that's what a lot of people are talking about. We could test those. I think that's the phrase that I've been hearing a lot of. We're liable to test those lows again. If it's a gradual kind of descent to there and we don't have a major let's say upward blip to inflation, then that might be the case, a gradual lower. But if we have a real ugly inflation blip that's a lot higher than expected, then the change is liable to be accelerated, and might be talking like 100 basis points instead of 75, and then that would accelerate the downside quite a bit. So the rate of change, I think, is actually more important than the absolute number that we're going to get to. I think people already have in mind that number that 3,600 they're just talking about. So I'd watch for really nasty, unexpected inflation news. Hopefully we won't get that, and it'll be a kind of a gradual, maybe even just a consolidation period. That's, I think, the best outcome is that we don't go a whole lot lower, but we just start to consolidate. But I'd watch the rate of change more than that.
Yeah. Thank you, Dave. I'd agree with what you said. Things don't add up for me when I'm listening and getting the numbers. We had a couple of quarters of GDP that was down, and yet employment jobs were still being added, at a large extent. And I'm going, well, how does that work? If GDP is going down, how are we adding so many jobs? And there are other things, but inflation, I feel, is higher, just as Josh was showing about Europe. Well, those things, to some extent, are here in the States. Food is still horrible. Yeah, fuel has come down, but it's still darn high, if you ask me. But anyway, thank you, Dave. Good comments.
Yeah, can you guys hear me now?
Yeah.
Okay.
Yes.
Yeah, I don't know, my internet connection said unstable. Um, yeah, those are all, good points. I mean, I think inflation, the drop in gas prices really, helped, as far as like tamping down inflation a little bit. Now, everyone's kind of betting on, we already hit peak inflation. I don't think that's a done deal. We had one reading, like where it dropped like, 0.2% or something, so I don't think, everyone's kind of, at least they were, before Friday, thinking we are at peak inflation. I don't think that's the case. We'll have to see how the data comes out, but I mean, we're still really high overall, well above 2%, that's not even close. We're not even in that neighborhood, so. But yeah, I mean, these are kind of the two levels Joe talked about, the previous low, I think on 16th of June, and then I think below that would be pre-pandemic highs would be the next stop, for, big movements down, Lee. And I think
Yeah.
I'm pretty sure Ashok said 3,300, but yeah, I'm pretty sure he said that a while back.
January 26th, I think, Josh.
Yeah,
Yeah, I hear 3,200 a lot. 33 is the same thing. I'm not going to argue about that.
mhm,
And then the real bad, and I hear a lot of I hear big banks talk about even lower. So I don't know. It's curious.
yeah. Well, I mean, that I would say that'd be the next two stops down.
I'd agree.
And then we can reassess if those do get hit. Yeah,
Right.
once if it hits 3,300, then we'll talk and we'll be looking at, the charts. I'm sure, at that point, IWM would cross below that MACD line and, things would get ugly,
Uh-huh. Okay. Thanks. Thank you, Dave.
Yeah, one of the comment though, or at least employment kind of disconnect there was another article I was reading today was talking about the JOLTS report and that the Fed is there's still people quitting jobs at a high rate. So Lee's point is, yeah, we have really low inflation, but we have all these job openings. So the problem is the jobs that are open are not the ones could be filled by all the people that are just returning to what pre-pandemic jobs that were not filled during the pandemic, but it's other jobs. It's jobs for new businesses and services that are, the demand side is what the Fed is attacking, right? They're attacking inflation on the demand side, trying to restrict demand with higher interest rates.
right.
But the problem is really there's just too many people, too many consumers chasing too few items and paying the higher price. So nobody's really acting on the supply side. And the supply side for gasoline prices and the food prices, when there's monopolies involved, they are very resistant to any inflation interest rate charges because they just pass them back on to the consumers. I mean, we got to put gas in our gas tank when we run out, no matter what the price is.
Right.
So it's the supply side that there's no action on to bring prices down. That's kind of the disconnect that I see. The Fed is fighting this with they call it a blunt tool because it is. It does not really get at the higher end of the inflationary pricing structure. It doesn't affect that. So this is Friday's jobs report, right? So we'll see again whether we have total employment, but still all these people changing jobs because there's jobs, better jobs to be had. And the Fed can't really fight that with higher interest rates, in my opinion, but that's what they're going to do. So we'll see. I'll get off my soapbox.
Yeah. Yeah, it's definitely, there is a supply problem. I mean, but, I mean, there's always eggs, but, the price went up, like 70% or something, but so I think part of it's supply. I think it's obviously a very complex issue, but a lot of it's like money printing and, supply, demand, there's multiple equations or factors going into that equation. So I don't know anyone that really understands it completely, that can model it well. So it's good points, Lee and Dave. Appreciate it. Anyone else? All right, I'll just do the quick earnings summary. Let me clear those out. So one new trade. So the only thing that's still active are the bullish runners. So we had one new trade last week. I think it's down a little bit. Obviously, we still have one open here. Abbey Bay, not sure when that'll close out. It's been open a little while. Obviously not great timing for the end of that trade. And we had two close out. So our profit dropped a little bit on these. We had two close out last week as losses. FTNT and AMD. AMD was a pretty big loss. So that's the big loser for this quarter so far, AMD. But overall, still doing well. Just kind of dwindling off at the end of the earnings, and we'll see how it closes up. All of those results in 2 weeks. So, all right. Anyone else got questions for me before Joe takes over? Comments? All right. I think that covers it. You got it, Joe?
All right, Josh, let's see. Can you let me share the screen here? Just a couple charts to go over.
Yep, we got it.
Actually, okay, good. Let me see if I can pull up one more. Just wanted to review a little bit the sectors. So, we've got 11 sectors, and what I find a little bit interesting, as far as the state modeling, sometimes it's very effective, other times not so much. But of the 11 sectors now, we have just, I think, 4 that are in bullish states, in bearish states. And I think, that probability percentage, the last column, only one of those is XLK expected to, of the 7 bullish sectors, only one of them, XLK, in terms of the algorithms, is expected to roll into a bearish state. So again, the effectiveness of the state modeling, varies from instrument to instrument, but 4 of 11 are bearish. The 7 that are bullish, only one from a probability standpoint is expected to go bearish. So, I just think that's a little bit interesting. Josh already spoke to, a handful of those charts. I will, actually one other thing about the dashboard, and I think everybody's well aware, certainly even in advance of the speech last Friday, all of the bond instruments are in state 8 and have been for a while. A couple of them, had rolled into state 7, but it's been, well over a week since they've rolled back into state 8. So, something to keep an eye on. With regards to a couple individual charts, I thought I'd pull up. One of those ETFs that went bearish is real estate. It just happened yesterday. There's a chart going back basically to the lows coming out of, I got to go a little bit further, out of COVID, so just to give you a perspective there. But I think, it hasn't been a great state modeling index for sure, but I want to keep watching it. If it rolled into 8, if we're going to get any kind of protracted downside, we see all the headlines, all the real estate numbers are coming in kind of below expectations. Things are slowing down there. So, I think something worth watching, that XLRE. We don't often pull up the FANG stocks, so I thought I'd pull up a few of those charts today. Google, it's kind of also been just an okay modeling stock, but you can see it's got a pretty good trend line above 100 there. We're above that at this point, but it's in state 8. So I think that may be one to keep an eye on as well as we move forward over the next month or so. Here's Apple. I was pretty blown away at how much Apple had run up coming out of the June lows, almost traded to an all-time high, well above recent lows. I don't think Apple's going to be a market leader to the downside for sure. I think Google potentially could be, but I just wanted to point out Apple just because it's such an important stock. Amazon, another one that in a bullish state. We had a pretty good bearish signal not too long ago, kind of in the April period. So in a bullish state at this point, don't really think it'll be a market leader, but again, because it's such a big follow stock, I think maybe keeping an eye on. And then Josh had pointed out, the SPX and the Russell. Just, I like the Elliott wave and really haven't seen any real Elliott wave counts, in a number of months. It's been more, trying to pick or at least anticipate Fibonacci levels. But finally, it seems to me both in SPX and Russell, it'd be interesting to see if, the current lows hold. They happen to be basically 50% retracements for the most part. Actually, NDX has exceeded a 50% retracement coming out of the June lows. Russell and SPS basically traded to them yesterday. We're languishing around those levels. But finally, what I find interesting is we've got symmetrical, just pretty much, Russell right to the money. You had, Russell had basically 120 point sell-offs, in the recent ABC. SPX, not exactly symmetrical, but really within about 18 points, of that downside ABC. So, it'll be interesting to see if the recent lows hold. If so, we'll have, a symmetrical ABC wave count, which will be the first in a long, long time. So I think that's kind of the only things I wanted to touch on, Josh. Just maybe keeping an eye on Google, in the short term, and that XLRE ETF, just to see if they offer any hints in terms of the next direction of the market. So, as always, happy to take any questions if anybody's got any. And it seemed to be coming out of the speech on Friday, the likelihood of recession would seem to me, maybe increased. And as is always the case, we're just wrapping up earnings season. It seems like a lot of the big corporations have really managed this inflation situation pretty well, as many of the earnings exceeded expectations. Now, of course, the street always downplays those expectations, going into announcements. But, even though we're just finishing up earnings season before long, I think that's kind of where we'll be talking. And it'll be interesting to see what kind of revisions for expectations we get going forward. Maybe next week I'll do some homework and see what the overall S&P 500 earnings expectations are for next quarter and talk about that then. So they are my thoughts for this week.
Okay.
Back to you, Josh.
Yeah, thanks, Joe. Does anyone have questions for Joe or? No? Okay, well, we'll wrap it up for this week, and next week we'll go through the daily trades results and have a regular market update, and we'll go from there. So thank you all for attending.
Have a good week, everybody.
Thank you.